Welcome to today's session on CPP. The presentation is 30 minutes long and we have a lot of material to cover. The PowerPoint has over 20 slides, but due to the time constraints, we'll start on page 10. The first 10 pages cover history on CPP, and you can request a copy of the full presentation on your feedback form. Please keep in mind that the information in today's session is taken from reliable sources, from the Government of Canada and the National Payroll Institute. However, it is subject to change, so please check all correspondence and materials and publications regarding the CPP plan. So my name is Anna McNally. I'm your presenter today. I have over 15 years experience in payroll and as a SAGE consultant. All right, so for those of you who may or may not be aware, the CPP enhancement is a two-phase program that actually started in 2019. So phase one ended in 2023, or started in 2019 and ended in 2023. And phase two of the CPP QPP enhancement started in 2024. So for 2024, Canadians between the ages of 18 and 70 who make more than $3,500 annually contribute 5.95% of their employment income. The YIMPI, which is the year's maximum pensionable earnings for 2024, is $68,500. That is the first ceiling. And the maximum contribution for 2024 is $3,867.50, or $7,035 if you're self-employed and contributing to CPP on your own. So here's a couple of examples or scenarios that we're going to look at that will review the CPP, CPP1, the first CPP and CPP2. So here's TJ, who is an employee who has an annual income of $59,000. So we have 3 years worth of information on the screen. We have 2023, 2024, and 2025. Our focus is going to be the highlighted area, 2024. So in 2024, our CPP contribution rate is 5.95% for a total YMPE of $68,500. And then our second contribution rate, which is referred to the YAMPE, is $73,200. So because TJ or David earns below the first YMPE, we would take total earnings of $59,000 less the $3,500 of exemption if the employee was with you for the full year, multiply the 5.95% to get your rate. And by the way, that rate of $3,302 would be what they would have contributed. The reason I have 2025 here is because 2025, we're going to see the continuation of CPP2 and enhancements, and perhaps in 2026, there might be some changes. But because we don't know what the rates will be in 2025, I left that blank. So throughout our session today, you will hear me making references to the YMPE, which stands for the yearly maximum pensionable earnings for CPP. And I'll also be referring to the YAMPE for the yearly additional maximum pensionable earnings, which we'll refer to as CPP2. So this employee who earns below the original YMPE, there is no extra tax, so no CPP2 will be affected. But let's look at an employee sample that earns more than that amount. So AJ, or Lindy, earns $95,000 annually. So before the first earnings, the YMPE, which is still 5.95%, up to the YMPE, it is $68,500. So you would take the $68,500 less the exemption of the $3,500, multiply the 5.95 to get the maximum premium for the employee. Now keep in mind that both employees and employers contribute the same amount. So any reference that I'm making for an employee, please keep in mind that the employer will also be affected. So the total maximum for 2024 is $3,867 is what they would contribute. So once this employee reaches that and goes beyond, meaning they are earning above the $68,500, then that is when the CPP2 contribution kicks in. So how to calculate that really is you can take the 68,500 less the 73,200, which is the next YAMPE, and then multiply it by 4%, and that will equal another $188. So what this means for this employee that earns $95,000 is they will be contributing a total amount of $4,007, which would be the YMPE premium of $38.67 and the YAMPE premium of $188. So let's look at that in a little bit more detail. So the first contribution amount for the employee that earned $95,000 was at $38.67 plus the additional $188 for a total of $408. My mistake, I think I said $407. But if you look at this particular slide, you'll see that the year before there was no second amount. So whatever the premium maxed out, when the employee maxed out, they did not have a second premium to pay. So what does this mean for your employees and your employer? So what it means for your employees who might have a CPP holiday at some point throughout the year, their holiday is just going to be postponed, and it could be postponed 1 or 2 or more pays, because instead of just paying the first premium, now they have 2 premiums to pay. So the question for you, are you prepared to answer employees' questions about the new 4% contribution? So make sure that your payroll system, and most of you are using Sage 300, is prepared, and I can let you know that Sage 300 is ready and has been ready for some time. Inform your employees of the new changes by meeting with them or sending them an email just to let them know so they can be prepared, because some employees count on those, what we call CPP holidays, in order to have a little bit more income in their bank. And then update any forecasting or any kind of employee costs that you have when you're doing your financial statements, so that you will increase it to account for that CPP2, which is an extra 4%. And be prepared to answer questions. So you might want to put together a document, and you can go online to the CRA website, and if you're an NPI, National Payroll Institute member, you can log on, and there will be samples of letters that you could put together or emails that you can put together and send to your employees with the information. So there is a bit of a tax treatment. So you may notice the amount that is subject to income tax may be lower than it would normally be. And this is to help reduce the impact of these CPP changes to taxpayers. The government treats the enhanced portion of the CPP contribution as a tax deductible. So what does that mean for you or for your staff? That means that they will see a slight decrease in the amount that is subject to income tax prior to the YMPE. After the YMPE, that amount will increase. So they will have to actually pay more income tax once they've reached that threshold. So in this sample you have in front of you, Georgina's a biweekly pensionable earnings of $4,500 for the first pay of 2024. The enhanced portion of the CPP contribution, the YMPE is, so we would take the $4,500 less the biweekly exemption of $134.61. And of course, that exemption will change depending on your frequency, multiplied by the 5.95%, which is what we're paying our CPP rate, and then multiply that by the 0.1, which is the enhanced portion of the CPP of the 5.95%, which equals $43.65. So the amount that's going to be subject to income tax is not going to be $4,500. It's going to be $4,500 less this 1% of $43.65. So what will be subject for tax would be the $4,456. So you're going to see a little bit of a tax break. But that is the YMPE. Once you've gone beyond that, meaning if you earn more than the $73,200, the contributions are different. So no longer would it be $43.65, it'll be slightly higher because it's at 4% at this point that you get the break on, not the 0.1 of the 5.95%. So for those of you who are after the YMPE, and this is just during the YMPE, So if you're earning between 68.5 and 73.5, you will actually have a reduction of 4% on your income taxes. So again, if you earn 4,500, less the $180, which is the 4% of 4,500, and you will be taxed at $4,320. That's just until you reach the top of the YAMPE. Once you've reached it, then your income tax will be at the full amount, which would be the $4,500. So an employee that earns $95,000 per year, they could see, or they will see, 3 different fluctuations of their income tax. And that is if they have no changes to their earnings throughout that year. So up to the YMPE, which is the 68,500, they're going to see a 1% reduction. From the 68.5 to the 73.2, they're going to see a reduction of 4%. And then beyond that, so once they start earning $73,201, that exemption is gone, and then they will be taxed on the full amount. So I'm going to talk about Sage 300 and what changes have been made with the latest tax table update. And I'll also hop into Sage 300 to show you where these are. I do have some screenshots, but I'll also show you in the system if we have time. So with the new tax table update, we saw a few additional features and of course some additional boxes. So the dental benefits. So in the employee payroll window under the other tab now supports the dental benefits in accordance with the Dental Care Measures Act. There are 2 boxes. One is for the employer offered field that has been added, and this is specifically made for box 45 in the T4. And then the second one is for payer offered, which would be in box 15 of the T4A. So if you do not do T4As, you do not have to fill out the information in that field, the field that says payer offered. When the tax tables got installed, you may or may not be aware that out of the 5 dental codes that are available for you to select from, the system defaulted to code number 3, which is that the payee, as well as their spouse and dependents, have access to a dental plan. Keep in mind that that information needs to be updated to reflect your organization and what your organization offered its employees as at December 31st of the reporting year. And what that means, if the employee that you have to generate a T4 for at the end of December 31st is no longer with you, you have to change that code to a number 1. Now, if your employee is on leave and still has access to a dental plan, then that code can stay as a 3. So to your best ability, please update those fields so they reflect correctly on the T4. Additional codes that were added were for T4A under the other information. So they've added T4A box 32, 107, 144, and 152. And over the next few other enhancements and rollouts, they will have additional T4A boxes that will be available. So here's an example of Sage 300 screens. So the screen on the left-hand side of the screen shows you the other tab and where those 2 new dental plan tabs are. So you have the employer offered. In my sample here, I've got them both set to number 1, but there are 5 choices here, 1 through 5, and tax tables defaulted to number 3. So if your organization does not offer a dental plan for your employees, you should change that to a 1. For the payer offer, that's only if you do box, if you issue T4As, and if box 016 is filled out on your T4A, it is mandatory that you fill out box 015, which is the dental code. And on the right hand of your screen, when you select the Employee tab under an Earning Deduction Code Setup, you're going to see on the second tab that says Employee, where it has reference for T4 and T4A. If you select the Other option, you will see the new boxes that have been added. So what else did Sage do? They also added the additional of CPP 2 and QPP 2 for those of you who have employees in Quebec. So during data activation, the following happened. CPP or QPP was added to the income tax window. CPP or QPP was assigned to the tax table tab for all employees, and that would be active, inactive, terminated employees. If they already had CPP or QPP, the CPP2 and or QPP2 would have been added. And lastly, for any payroll codes that had CPP2, that had CPP, CPP2 was added. So here's an example of all the areas that CPP2 was added. You do not have to go in and add these yourself. If you had your tax tables installed and activated, this would have been done automatically. So the first on the top here, and I'll just get my highlighter here just to show you. So on the top here, this is under the Payroll Employee Master File. Under the Taxes tab, CPP2 gets automatically installed, and it would use the same GL distribution code as CPP. So if you have multiple GL distribution codes for your CPP tax, it would do an exact duplicate. Also under the payroll income tax, it added a new code. So it took a copy of CPP and created one called CPP2 with all the calculation base, all the GL distribution codes, and all the general information on the first tab. And lastly, under any earnings and deductions that referenced CPP under the subject to the following taxes area, CPP2 was also added. The T4 has changed. So in 2023, CRA released a new T4, and that T4 actually covers more information than is required for the 2023 T4s. It covers 2023 and 2024 requirements. So in 2023, you should be reporting box 45, which is the dental benefits. And in 2024, you will be reporting in boxes 16A, which is the CPP2, or 17A, which is the QPP2. When you issue your 2023 T4s, those amounts or those boxes will be blank. They could be completely blank or they could have zeros in them, but they will not have any information. So I'm going to pause right now to see if we have any questions in the queue.
Yes, we have one question. Can you please advise how Sage calculate the CPP2 for non-periodic payments?
That's a good question. So there are a couple things that you need to be aware of for CPP2, and I'm actually going to back up a second here and go into my Sage 300. So under my Sage 300, I want to let you know that when you, two things, and then I'll answer that question. The first is when you set up a brand new employee, you have to remember to set up both CPP and CPP2 if you are adding, if that employee is within pensionable age, between the ages of 18 and 70. And of course, if an employee decides to start taking their CPP benefits, then it would be sooner. So just remember from now on, when you set up a brand new employee, you have to add both CPP and CPP2 if applicable. If you have already set up employees in 2024 and have done a pay in 2024 without adding the CPP2, please contact BAASS. How the system is calculating is each time you run a pay that has CPP2 and CPP, the system is actually calculating the amount that was used to calculate that punch-in for both codes, so that once the YMPE is reached, it will then kick in the other CPP2 code. So depending on if you've already set up employees without it, and if you've already run a pay in 2024, there could be some things or some implications, and we might have to make some adjustments under transaction history to account for that. So whenever you have a code that does not affect, or CPP2 is not affected, you can do a couple things. One is when you're paying the employee, so for example, non-periodic payment, and you're paying the employee, you may have to create a time card for them, and you may have to adjust CPP, the CPP1, sorry, regular CPP and CPP2 under the time card. So what I mean by that is when you're in the time card, I'm just going to wait for my time card to pop up here. So the only place, if you have salaried employees, the only time you're able to adjust the amount of taxes that are going to be deducted is in a time card environment. So if I select an employee here, let's select our sample employee. Under the time card, you can actually go under the taxes. And depending on your setup, now this one I already had one in there as a test, but you would add your two CPPs, your CPP1 and your CPP2, and if you need to override CPP2, you would come in here and you would insert that tax. So you would click in here and you would insert that tax. So let me just show you that. I'm just going to delete these ones here. This was just a sample that I had. So in a non-periodic payment, if you have to adjust CPP2 because of the effects it's going to be on the payment, then you can insert your tax here, CPP2, and you can override the withholding to 0. Now, Sage is aware that there are some, or there was a reported issue with non-periodic payment, and they will be releasing either a hot fix or on the latest or in the next service pack, which will be coming out, I think, in March. They will release the fix. But until then, you may have to adjust your CPP to using a time card. If you have hourly employees, then they are already using a time card. But whatever you put under the time card supersedes what's in the employee setup. So I think we have time for one or two more questions.
The next question is, if I understand correctly, since BAASS did the tax update for us, the CPP2 code is in all staff profiles and earning codes that were present at the time, and I should only have to add CPP2 to the new earning and staff profile.
Correct. So any new employees or any new payroll codes, you will have to manually add well, you're going to have to do it anyway. You're going to have to add CPP and CPP2.
All right, one more question. When a person dies and he still has balance in his CPP account, does it expire or roll over to his spouse account?
I will answer that question, but I won't answer it on our call today. I will answer any questions that I don't answer, by the way, on our call. I will be answering and we will be posting them so that you can review these answers.
Yeah.
There's not enough time to answer that one.
Absolutely. Yeah. So there is no more question and
no more questions? Okay. I just want to bring up one thing to your attention. You may or may not find this useful, but under the payroll income tax, you may or may not have noticed that now you can actually default. So you know how when you set up a brand new employee, unless you have an employee template, you have to add all the applicable taxes. What you can do is you can have a tax. So for example, if this is my Saskatchewan tax, I only have going into one distribution. I can click on include for employees by default. And what that means is when I set up a brand new employee, I do not have to set up this particular tax. Now there's only one caveat with that, and that is when you select this option, you have to go under the GL distribution and identify what line as a default. So if for income tax, for example, if all your income taxes, whether it's provincial or federal, are going to a liability account, then it's pretty simple to select to include for all employees as a default, as well as select the distribution code. And when you set up an employee, it will have that default. If you have a lot of distribution codes, for example, for CPP and EI, because of the different expenses, you may choose not to use this option, or you could select an option and select a default GL distribution and just be sure that you change it. So I just wanted to give you that little bonus in case you didn't realize that that was there. Okay. Well, thank you very much for your time today. I hope you learned enough information to get you going about CPP enhancements. Please keep in mind that the presentation does have a lot more information about CPP, the history of it, not CPP in general, but the enhancements that will be made available to you. Any questions that have not been answered will be answered and they will be posted.